Hello and thank you for joining us for today's MacDesk Floor Report on a Fed Thursday. I'm Rebecca Darst from the Market Access Center here on the floor of the New York Stock Exchange. The date is September 13th and we're seeing volatile upside following the Fed's formal announcement of a third round of bond buying earlier today. In a policy move widely foreseen by the market, the Fed confirmed that it will buy $40 billion a month in mortgage-backed securities for the foreseeable future, with interest rates expected to remain at zero through at least mid-2015. The decision came with a single dissenter on the FOMC, this being Richmond Fed President Jeffrey Lacker. Stocks were treading water ahead of the decision, but there was an immediate pop higher, a little wobble, and then a pop higher again. Presently, we're up 150 points in the Dow, so we're clearly on an upswing. The VIX, which had already softened a little after yesterday's German High Court ruling on the European Stability Mechanism, has continued to contract. We're down about 8% in the VIX right now, testing the 1450 level. We last closed below 15 in the VIX back on August 20th. Although option volumes have perked up post-Fed, now indicated to come in about 40% above the norm. Now, we mentioned in today's midday that option traders were particularly active in the Gold Trust Spider. This is ticker GLD, but they've been quite nimble and pragmatic in their positioning. GLD was trading as low as 166.30 just before the policy announcement came out. Right now, it's testing $172 on the news, but ahead of the move by the Fed, we observed traders buying calls at the 174 strike in the weekly contract, which only trades through tomorrow, selling or arbitraging the same call strike in the monthly against these short-term calls. In other words, looking for a Fed-related pop in GLD to diminish very quickly. Otherwise, we've been seeing buyers of shares in the GLD fund adding to their long exposure in gold by selling downside puts, specifically at the December 160 put strike. In other words, traders are willing to buy more GLD, but only in the event of a pullback below $160 by the end of the year. Heading into today's session, gold bulls were positioned not so much in the Bullion Index Fund, but in the Market Vectors Gold Miners ETF. That's ticker GDX. That fund is up a buck at 5104. And a block trader late Wednesday positioned for a move of 6% to the upside by October expiration. But rather than just buying calls outright, for example, this particular trader bought and sold calls at different strikes together in what's known as a butterfly spread in order to manage their cost basis and take advantage of the volatile price of gold-related call options themselves. So on the whole, we're seeing traders bullish on gold, but very short-term motivated and perhaps relatively more upbeat on gold miners than in the metal itself. So right now, we're waiting for the FOMC's updated forecast for the U.S. economy. That's due out later this afternoon, along with a press conference with the chairman himself, Ben Bernanke. To that end, weekly options in the S&P Spider, ticker SPY, have been active once again today, with traders favoring close to the money calls at strikes 146 and 147, as the underlying trades at around 145.39. This may be a sign that the hedge fund crowd, which is most active in these weekly contracts, is looking to end the week on a strong note. And indeed, we're seeing major financial stocks trading at a 5-month high. The market is ready to like what he has to say, at least in the very short term. So in other news this morning, we had a modest increase in weekly jobless claims to 382,000 new claims. That was up from an upwardly revised 367, and a hotter than expected producer price index. This was up 1.7% in August, up from 0.3% in July, driven largely by higher food and energy costs. We'll be watching all of the Fed action, the statement, the press conference, the chairman's beard. If it's moving the market, the MacDesk is on it. So keep an eye out for the very latest in the midday report. For now, that's it for me, Rebecca Darst, for the MacDesk Floor Report.